Assalamualaikum warahmatullahi wabarakatuh. My name is Aminah Jahanti Azman. My metric number is 317462. Today, our group would like to present about EcoWorld Development Group and Blomek SDMHD Group Financial Statement Ratio. For the introduction, EcoWorld Development is one of Malaysian leading property developers, well known for its large-scale development and modern community-based concept. This concept focuses on residential, commercial and industrial park projects, emphasizing a sustainable and quality-giving environment. EcoWorld is also recognized for developing well-planned township equipped with public amenities, green landscape and urbanized infrastructure. This company has expanded its operations internationally through projects in the United Kingdom and Australia, making it one of the loan developers with a global presence. Blomek Berhad is a Malaysian property developer that focuses more on affordable and mid-range residential development, particularly in the Klang Mid-Valley area. The company builds landed house, apartment and commercial properties to meet current market demand. This company also prioritizes community development, emphasis on affordable living. This company also places importance on governance and social responsibility in its operations. For the company ratio, I will explain about the liquidity ratio. For the current ratio, EcoWorld Development SDMHD have 1.58 to 1 in 2023, while Blomek SDMHD have 1.19 to 1. And for 2024, EcoWorld Development SDMHD have 1.63 to 1 and Blomek SDMHD have 1.18 to 1. And for the last year that we use to calculate this ratio is 2025, which is in EcoWorld Development SDMHD have 1.85 to 1 and Blomek SDMHD have 1.61 to 1. The comparison for these two companies is in 2025, EcoWorld Development SDMHD record a higher current ratio which is 1.58, while Blomek only achieved 1.61 to 1. This clarifies that EcoWorld has stronger short-term liquidity compared to Blomek. Nevertheless, both companies maintain a healthy liquidity position and are able to meet their short-term financial commitment because these two companies has recorded increased ratio in their financial. We move on to the next slide, which is quick ratio. I would like to explain about the ratio for these three years for these two companies, which is for EcoWorld Development SDMHD and Blomek SDMHD. For 2023, EcoWorld Development SDMHD have 1.09 to 1 and for Blomek SDMHD have 0.93 to 1 ratio, which is for these two companies. EcoWorld Development have higher current ratio than Blomek SDMHD. For 2024, EcoWorld Development SDMHD have record 1.06 and for Blomek SDMHD have 0.87, which is EcoWorld Development have higher current ratio than Blomek SDMHD. And for the last year is 2095, which is EcoWorld Development have record 1.23 to 1 and Blomek SDMHD has record 1.01 to 1 ratio for their company. The comparison that we can make for these two companies is, as we can see from the table, these two companies is make a positive increase ratio by the year, but the higher achievement for this ratio is given to EcoWorld Development, which is in 2025. EcoWorld Development achieved 1.23 to 1, while Blomek SDMHD have only achieved 1.01 to 1 for their company.
Hi, Assalamualaikum. My name is Asha Zirapitia Resha. My machine number is 3078882 and I'll be explaining on asset turnover ratio. for Ecoworld Berhad, in 2023, the asset turnover ratio was relatively high, reflecting the efficient utilization of its substantial asset portfolio to generate revenue from property development and sales. The ratio stayed constant in 2024, indicating the same level of efficiency and revenue from asset in previous years. This indicates that Ecoworld was well managed in the development of its project and resources. Total asset grew more rapidly than revenue, causing ratio to decrease slightly in 2025. Revenue increased, but the rapid growth in asset meant a decline in overall efficiency of assets used. In 2023, Glomac had the highest total asset turnover, indicating that the company was able to generate revenue from its asset more efficiently than the other companies. The improved asset productivity was due to increases in property sales and development activities. In 2024, the ratio has declined, suggesting a drop in revenue compared to its assets. This indicates reduced asset to sales conversion, which could be attributed to reduced demand for properties and or maybe slow project development. The ratio stayed low in 2025, indicating ongoing lower levels of asset efficiency. Total assets decreased, but so has been income, which kept the turnover ratio relatively weak compared to 2023. In conclusion, Ecoworld performed better than Glomac in using its asset to generate revenue, as shown by its higher and more stable total asset turnover ratio from 2023 to 2025. In contrast, Glomac's lower and declining ratio suggests it was less efficient in generating sales from its assets over the same period. Moving on with the account receivable turnover, the company receivable turnover ratio was moderate in 2023, indicating that the company was fairly effective in managing credit sales and collecting receivables from customers. The ratio was unchanged in 2024, showing a consistent management of receivable and effective collection efficiency. The company's revenue recognition and outstanding receivables were balanced. The ratio increased significantly in 2025, indicating that the company improved its ability to collect receivables and to convert sales into cash. The improvement indicates improved credit control and cash collection, and this is for Ecoworld Berhad. Moving on, the account receivable turnover ratio was high for Glomac in 2023, which shows that the company was efficient in collecting its receivable and quickly converting credit sales into cash. This is due to a strong collection effort and a good credit management. The ratio decreased substantially in 2024, indicating that receivables grew at a higher rate than revenue. This implies a slowdown in the collection of receivable as compared to 2023. It fell further in 2025, signifying less collection efficiency. The company had a higher proportion of receivable to sales, indicating that they had more cash on the balance sheet stuck in uncollected sales. And for the conclusion, Ecoworld showed a more stable and improving account receivable turnover ratio from 2023 to 2025, indicating a better collection of receivable and credit management. In contrast, Glomac's ratio declined significantly over the same period, suggesting reduced efficiency in collecting payments and converting these receivables into cash. Thank you very much. That's all for me.
My name is Sinta Kamara binti Badrudin, number entry is 308069, and I will be explaining about profitability ratio for both companies. From 2023 to 2025, Ecoworld showed stronger profitability compared to Glomac. Ecoworld's profit margin increased steadily from 12.12% in 2023 to 21.01% in 2025, showing that the company was able to generate higher profits from its operation. This improvement was mainly supported by successful branding strategies and the sale of industrial land for data center developments. In contrast, Glomac experienced a decline in profit margin from 14.80% in 2023 to 12.27% in 2024 due to economic challenges and rising costs. However, the company managed to recover in 2025, with its profit margin increasing to 14.67% through better cost management and project completion. Overall, Ecoworld demonstrated stronger profitability growth throughout the period. Now, looking at return on equity or ROE, EcoWorld again performed better than Glomac. EcoWorld's ROE increased from 5.67% in 2023 to 11.06% in 2025, showing that the company used shareholders' funds more effectively to generate profit. The growth was supported by strong earnings, particularly from industrial land sales. On the other hand, Glomac's ROE showed a declining trend, falling from 4.03% in 2023 to 2.64% in 2035. Although the company improved its profit margin in 2035, its ROE remained low because more capital was tied up in long-term projects. Overall, EcoWorld showed better efficiency in generating returns for its shareholders during the 3-year period.
Hello, my name is Kirvashni and my matrix number is 315178. Let's look at how both companies fund their assets. In 2023 and 2024, both developers kept their debt levels safe and below 50%. However, by 2025, their debts completely split. EcoWorld's ratio rose to 0.54 to 1, meaning debt now funds 54% of its assets to fuel aggressive expansion. On the other hand, Glomac systematically lowered its risk, dropping its ratio to a highly conservative 0.30 to 1. Glomac clearly holds a much larger asset protection cushion. Moving on the debt to equity ratio, the contrast becomes even sharper. By 2025, EcoWorld breached the safe threshold, hitting 1.16 to 1. This means its external debt now exceeds internal equity, creating a higher risk capital structure that relies heavily on high project profits. Meanwhile, Glomac dropped its leverage to a lean 0.44 to 1, meaning its operations are safely backed by internal equity. In conclusion, Glomac enjoys superior financial stability and low risk, while EcoWorld traded off solvency safety to chase aggressive high-yield growth.
Now let's move on to improvement suggestions for both companies. Based on the financial ratio analysis from 2023 to 2025, both EcoWorld and Glomac have their own strengths and weaknesses. EcoWorld shows strong profitability and better operational efficiency, while Glomac maintained a more stable and conservative financial position. However, both companies still need to improve areas such as asset utilization, receivable management, and long-term financial sustainability. For Glomac, the company should focus on improving sales performance and collecting customer payments more efficiently. This can be done by completing projects faster, implementing better marketing strategies, and strengthening its credit control system. For EcoWorld, the main focus should be on managing its debt levels and maintaining sustainability growth. The company should gradually reduce its borrowing, improve cash flow management, and continue maximizing the value of its land and development projects. Overall, both companies can strengthen their financial performance by improving operational efficiency, managing assets effectively, and maintaining a balanced financing strategy.
In conclusion, the 2023 to 2025 financial review highlights two completely opposite corporate strategies. EcoWorld pursued a high-yield growth track by expanding into lucrative industrial sectors, successfully achieving strong net profit margins of 21.01% and an impressive investor return on equity of 11.06%. However, funding this rapid expansion required aggressive borrowing, which pushed its debt to equity leverage to a risky 1.16 to 1 by 2025. Conversely, Glomac prioritized risk reduction and financial safety, building an excellent long-term solvency cushion by cutting its debt to assets ratio down to a highly secured 0.30 to 1. Unfortunately, this defensive strategy severely hurts its operational efficiency, causing slow collection cycles of 2.82 times, weak asset turnover of 0.13 times, and a low return on equity of just 1.41%. Moving forward, EcoWorld must focus on deleveraging by using its high profits to pay down outstanding liabilities back below the safe 1.0 to 1 threshold. Concurrently, Glomac must focus on efficiency by overhauling its credit collection policies to speed up cash inflows and aggressively liquidating slow-moving property inventory. Ultimately, EcoWorld stands out as the more productive and profitable developer but must manage its rising debt exposure, whereas Glomac remains heavily insulated from financial distress but must immediately accelerate its asset velocity to restore value for its shareholders. Thank you.